Welcome to my channel. I'm Scott, and in this video we're going to talk about Energy Transfer's most recent earnings. The last time ET reported earnings was for 4Q 2022. Before we get into the numbers, let's talk about the company on a high level. Energy Transfer transports and stores natural gas, crude oil, natural gas liquids, and refined products. To put it simply, it makes money by storing energy and moving it through its pipelines to various customers. It owns 90,000 miles of pipeline infrastructure across 38 US states, also in Canada. The company owns all Sunoco branded gas stations in the US. Currently there's over 7,000 of those. If you want to invest in just the gas stations, you can simply invest in ticker SUN, S-U-N. SUN's market cap is $3.8 billion. But all of SUN's financials are consolidated into ET's financials. ET also owns USA Compression Partners. If you only want to invest in USA Compression, just look for ticker USAC. Their market cap is $2.1 billion, but all their financials are combined into ET's financials. Energy Transfer is structured as an MLP, a Master Limited Partnership. A Master Limited Partnership pays a lot less taxes than a traditional corporation. In order to qualify to become an MLP, the business must receive at least 90% of its revenue from natural resources or real estate. ET is headquartered in Dallas, Texas, and was founded in 1996. The ticker trades on the New York Stock Exchange, London Stock Exchange, and Mexican Bolsa. So let's go through their press release from their 4Q 2022 earnings. So in the fourth quarter, they had net income of $1.16 billion, which is up $234 million from the same period last year. So that gives them earnings per share of 34 cents. Adjusted EBITDA is $3.4 billion, up from $2.8 billion. EBITDA is earnings before interest, taxes, depreciation, and amortization. And cash flow is also up from $1.6 billion to $1.9 billion. It looks like they mentioned a big part of this improvement was due to the acquisition of Enable Midstream. CapEx of $1.9 billion in 2022 and maintenance CapEx of $740 million. A lot of their CapEx is the build out of the pipelines. It's very expensive. So companies like this spend a lot of money in CapEx in building out their infrastructure. A company like Tesla spends a lot in CapEx when they build factories. But a company like Google may not have as much CapEx as a company like this. Generally, technology companies have lower CapEx than manufacturing companies or midstream companies. When a company releases their earnings, two things have the biggest effect on the stock price: what their earnings were, if they were good or bad, and also what the outlook is. If the company has a really positive outlook for 2023, the stock is going to go up. Even though they haven't made any money yet, if the outlook is really good, people start buying the stock. On the flip side, if the outlook is bad, people will sell off their stock. But if the company reports a grim outlook for 2023 and actually does really well, the stock will shoot up. Their 2023 EBITDA outlook is between 12.9 and 13.3 billion. And they expect to grow their CapEx 1.6 to 1.8 billion. And right here on the first page, they mention highlights for the fourth quarter. They reached new milestones with volumes increasing across all segments compared to the same period last year. NGL, that stands for natural gas liquids, fractionation volumes were up 7%. NGL transportation up 5%. Because remember, midstream companies transport and store oil. Let's look at their financial highlights. Just 2 months ago in January, they announced a quarterly dividend of 30 cents. In December, they issued debt of $1 billion with an interest rate of 5.5%, another note of $1.5 billion with a rate of 5.75%. So it looks like they're going to use this debt to pay down other debt. This is probably a good use of debt because I'm hoping the debt they're paying down has a higher interest rate. For all of 2022, they did reduce their long-term debt by $800 million. That's what you'd like to see, debt going down. They have a facility where they can borrow up to $4.2 billion. So it looks like the numbers I mentioned in the beginning of the video were a little stale. They actually have 120,000 miles of pipeline, and that spans 41 states. And they mentioned here they own Sunoco and USA Compression Partners. They own 34% of Sunoco stock and 47% of USAC stock. Sunoco has 10,000 convenience stores across 40 states. USAC is one of the nation's largest independent providers of natural gas compression services. In these press releases, they do give their financials, but they're condensed. They leave out some things. So if you want to see their full financials, you can look at their 10K or 10Q. So current assets are up. They were $10.5 billion, now they're $12 billion. PP&E is down a little bit, but it's pretty much flat. They do acquire a lot of companies. They have goodwill of $2.6 billion. Goodwill is the premium you pay when you acquire another company. Companies like Apple grow organically, so they don't do many acquisitions. I don't think Apple has any goodwill. They do acquire companies, but they don't pay more than what they're worth. That's why they don't have any goodwill, or it's really small. Their total assets are pretty much flat at $105 billion. Current liabilities are pretty much flat, so their current assets of $12 billion are higher than their current liabilities, so they have a good current ratio. You want a current ratio above 1, that's current assets over current liabilities. Last year they had a current ratio below 1, $10.5 billion over $10.8 billion. It's not terrible to have a current ratio below 1 as long as you have a lot of cash flow coming in. But if you're cash flow negative and you have a current ratio below 1, that could be a big red flag. Long-term debt is down a little bit from 49 to 48 billion. It is a lot of debt. They don't have stockholders' equity, they have partners' capital. Since they're an MLP, they don't have stockholders, they have unit holders. So they receive $6 billion from preferred unit holders and $27 billion from common unit holders. I'm a common unit holder, and this stock has done really well the past year for me. They do have positive equity, it's over 40 billion. And you notice they don't have any retained earnings, they call it partners' capital, that's 33 billion. Partners' capital is a sum of all the company's prior net incomes minus the sum of all the dividends they paid out. So fourth quarter revenue is up from 18.5 billion to 20.5 billion. 2022 is up a lot from 67 billion to almost 90 billion. The cost directly to generate this revenue was 16 billion. So cost of goods sold is a big chunk of their expenses. They have operating expenses, 1.4 billion. They're always gonna have lots of depreciation and amortization because they buy a lot of fixed assets. Their pipelines get depreciated each year. That was 1 billion in the fourth quarter, up slightly from 4Q 2021. So total expenses 18.7 billion, so they do have positive operating income. Their operating margins are kind of low at about 9%. To calculate their operating margin, it's operating income over revenue. It's what percent of your revenue you convert to operating profit. So they convert about 9% in the fourth quarter of 2022. So it's not ideal that their revenue is a lot higher, but their operating income is lower. You would expect operating income to go up when revenue goes up. But apparently their expenses went up faster than their revenue went up. But at least they're profitable, which is a good thing. So their net income is up from 1.2 billion to 1.4 billion. In 2022, it's down when you compare it to 2021. Their earnings per share is up from 29 cents to 34 cents. But for all of 2022, it's down from 189 to 140. And the way you calculate earnings per share, it's net income, 1.15 billion, divided by the shares outstanding, 3.1 billion. That's how you get 34 cents. And diluted earnings per share is net income over diluted shares outstanding. This is assume all the convertible securities converted to equity. So it seems like this company is continuing to do well. And as you know, I'm really bullish on ET. It's one of my bigger holdings. So I hope you learned something new in this video. Like, subscribe, comment. Talk to you soon.